Oh, so SBA. All right, we got a few things. I'm just going ahead and because I'm doing indices. I'm be brutally honest. This whole session, please don't ask me any Forex pairs because I will not go over them. I'm only gonna do indices for here on out, only due to the fact that I am super good when it comes to indices. Second of all, I feel like that is a bread and butter for anybody. Like to get into indices, I feel like that can you can still make a lot of money in Forex pairs, but I feel like learning indices overall will help you, overall, because I started with NAS and you can really trade NAS with this. I believe you can trade NAS with like $100 and you can be straight and it's good overall. Indices is at where it's at for real. So most definitely depending on I will honestly say, and this doesn't go for the third world countries. I'm talking about in the masses of in general. I feel like everybody should be saving up and starting an account with probably 300 or more. That's how I feel, because I feel like you have a lot of room with $300 or more. And if you can put more, go more. So you can risk properly. Like it's hard to risk when your account is only $60. It's DAX. No, we're doing US 30, NAS, and I'm gonna probably do gold here and there, but we're really gonna go over US 30 and NAS. I noticed something, and I'm just talking to you guys, but I noticed something. I kind of started, NAS was something I came up with. Like that's what everybody knew me as, like the person that traded NAS. I even got NAS tatted on my arm. I traded it so much. That was the only pair I traded. Literally the only thing I traded. And I noticed my trading style and my trading was different when I started switching everything up. And that's why I made a mistake at. I stopped trading NAS because I seen my boy trading US 30. And I was like, oh, I want to do that. And I traded US 30 here and there. I was making some good profits. And then I was like, dang, and then I started moving out. Then I was like, oh, if I can trade US 30, I can trade anything. I started trading some gold and I was like, Forex pairs. But then I noticed that the way that I was trading was just kind of changing overall. So what I'm trying to say is I'm going back to sticking to one thing. I'm going back to that. Because you literally, you met Q Bank switched on NAS and nah, it wasn't that. I met Code. I met Code and Code trades US 30. But anyways, what I'm trying to say is sticking to one pair or sticking to one or two indices. I can literally back then, if you was to come up to me in a store or something and be like, yo, sorry, what price is NAS is at? I don't even have to look at my phone. I could tell you. That's how in tuned I was. All right, so all right, so everybody knows I go when I wake up, I'm on a 1 hour chart. This is the time frame that I look at for anything. Anything, everything, I'm always on the 1 hour. And then if I need to go lower, I go lower. But most of the time, I'm on the 1 hour. So that's the time frame I use for the people that ask. Time frame I use the most, 1 hour time frame. Do I use the higher time frames? Sometimes. Not. It's rare. It's rare because I feel like if I go higher, that's only for me to know what I want to see. This is more of a swing trade time frame. This is more for me to swing trade something. This is something I want to look at. Where is it going overall? That's something I would be looking, yo, this is where it's going overall. My entries come from whatever time frame aligns with whatever I'm looking at. So it doesn't matter. It doesn't matter what time frame you enter on. This is the thing. It doesn't matter what time frame you enter on, due to the fact that since we trade price action, let's say if price is under this level, under this low, it doesn't matter what time frame you're getting in as long as it's under this level, if that makes sense. Yeah, we trade price, not time frames. Yeah, we trade the price because I don't know how to put it. A zone is there for a reason. A zone is calculated numbers, an average amount of numbers put into one area. So it's an average of all the orders hitting here. And that's why it bounces. That's why it moves. It's buyers are right there in the market. And it's like, all right, this is where, it's cut, this is where buyers are at, and we can't go any lower than this. So when price is pushing below this already, this is telling us, all right, this is broken. So it doesn't matter what time frame you're on when the second time comes around. It doesn't matter what time frame, because we already know that once price is under this level, we know that that's where the pressure is going to come in at. That's where the selling pressure is going to come in at. So it doesn't matter what time frame you're on when it comes to your entries. Overall, I feel like nobody should be marking up their charts. Nobody should be getting you should be trading higher time frame. And the only reason you go into the smaller time frame is because you're looking for something based off the higher time frame, right? If that makes sense, that makes sense. So you shouldn't, how about I put it this way? Don't place a trade. Don't place a trade on your MT4, MT5 until you looked at the 1 hour and broke it down from the 1 hour. Don't place a trade at all until you look at the 1 hour and then go down. Don't get on the charts and just look straight at the 15. Don't get on the charts and look at the 5 minute. Get on the charts, go to the 1 hour or higher. Yeah, you can use higher. You can go higher and then break it down. Do not mark up your chart on the 5. Do not mark up your chart on the 1. Do not mark your chart up on the 30. Don't mark up your chart on the 45. Start with the 1 hour first. If you need a little bit more detail, that's the only reason you go in. The only reason you're supposed to be on a lower time frame is to get details. Only details. A detail to overall, wait, lower time frames is like having your face 3 inches from the screen. Yeah. All right, now you said I start with the daily max. Now, I'm gonna be honest, daily only tells so much. Like if you're like trying to find a position now, that's why I like the 1 hour. If you're trying to find a position now, seeing like, okay, I see there's some rejection here to this resistance. Like I'm gonna show y'all what I'm looking at anyways. ICT, I don't really know too much about it. I used to try to study it back when I first started, but I just ended up knowing that ICT was kind of like a simple version of just price action. Well, like a more explained version of price action. At the end of the day, price action is price action. Like you can't, I'm gonna break it down in a bit. I just really want to talk to you guys about this. When you're on the daily, I want you guys to understand when you're looking at the daily, you're not expecting like, if you're making an analysis off the daily, it's not gonna happen in 2 days. I'm telling you this right now. It's not going to happen in 2 days. It's not going to happen in 1 day. It's not going to happen in 3 days. You're making it off the daily. These are 24-hour candles. So the reason why I don't be on the daily is because, yeah, that's a swing. It's a swing. It's a swing trade time frame. And then even that, it's not even a swing trade time frame. It's more of like a yearly time frame. No, I'm just playing. But overall, I would suggest no higher than probably like the 4 hour. And if you want to go to the daily and see what's up, you can. But the only time you should be in the daily is when you're trying to look at the overall direction of where price is going. Because if I want to be honest, right here was the previous high, right? This is the previous high. Ooh, I just love talking about charts, right? We had our lowest low. And if you can go back into my old YouTube videos or my YouTube videos now, and you can see this is the reversal. So we was on a downtrend indication. So it pulled back and corrected itself back under this level. You would have been selling. And then we finally hit the lowest point of the market. The lowest point of the market was here. This was the highest point we had in the market. It broke that. It broke above here, kept making highs above here. Then price started correcting. I mean, not correcting, but continuing up, making more highs, making more highs. So the whole time, this was the direction for NAS. This was the direction for NAS the whole time. It was the indication that price wanted to go up. There was a full correction to take everybody out. Probably even got in some more sellers because they was like, oh, you know, NAS is going to sell. Everybody wants to see indices sell, right? Everybody wants to see indices sell. So then probably faked the people out, ended up coming back above this level and then buying up some more with new indications. So we got a new high, so a new indication, correction back under this level. Then we come back above. You already know it's going to go. It's the same thing, repeating process, right? So we took out one high. So this was target 1. Now target 2 is being hit. So let's say, let's just do this, right? Target 1, right? Target 1, and we're gonna say target 2. And the reason these are targets is because whenever you're buying, so I want you guys to remember this, right? Whenever you're buying, always look for price to buy up to a high. And what I mean, it's like, when I mean that, don't just like target anything that you see as a high. Look at what the overall swing highs and swing lows. And I'm also going to teach you guys that too. So when it comes to swing highs and swing lows, you want to look at the overall, like what is overall? So like, let's go down the chart, right? So these would technically be swing lows at this current point. This would be swing lows. This would be swing highs. And the reason is this the highest point of where price is at that time. And then it goes down. This will be a swing low. And then it comes up. This is the highest point of the market. This was swing high. Then it goes all the way down. This is the lowest point before it makes another move. This is a swing low. This will be that high. And then it goes all the way down. And then this will be another swing low. You would say this one too, honestly. I'm not going to forget about this one too, and the high. You can see there's big movements off of that. And then it comes all the way up. This is another high. This happened because price already made a new low. So I don't know if y'all been keeping up with the videos. I don't know y'all got to do your own work. But like I explained, when price makes a new low, it can do whatever it wants after the fact, because this is the indication. This is a new low. You're never supposed to trade based off the new low. You're supposed to wait for it to come back around or wait for the second time, because when you're buying something or you're selling something off the new, like it's being new, it can retrace, stop you out, and then later come back down. You don't want to be stuck in a situation where it's going to sell just because it told you like, yo, I broke a level of support. Now we have a new low. Don't trade this. ICC is not a paid course, sir. Don't trade this. When it breaks a support level, don't trade it unless you have a target that you're looking for. And that's coming from the second time around. So something like this, right? Boom. This was a level of support. It got broken. It retested. When it was building back down, you already knew what to target. This should have been, you should have been in a trade, something like this. From here, from breaking down from here all the way down to here, and you would have been out. And then you would have seen, oh, there's a new low. Now you know in your head, you should know. Oh my God, hold on. Bro, I'd be feeling like church in here. I'd be telling y'all some sauce. All right, when there's a new low, don't trade it. Please don't trade it. I don't care how far it goes up. I don't care how far it goes down. Don't trade it. Please do not trade it, because you can be lucky. You can be lucky and trade some breakout and it would have kept going down. You could have traded a breakout and it would have kept going down. But bro, I'm telling you from experience, bro, I've got into some trades where it looked like everybody was getting into the trade and it was going down, it was going up, and it was going crazy. And then just for it to retrace, just for it to retrace. And you're like, damn. And the reason I'm telling you guys not to do it the first time is because when you do it the second time, you already know where it's going to go. So there's a new low, right? There's a new low. It corrected itself. Back under, if you would have just waited, a couple days, look, 1, 2, that's probably like, if you would have waited probably 2-3 weeks, you would have had, what is this? If you would have waited, no, it's like 2 weeks right here. If you would have waited 2 weeks, you would have just made 1,000 points on NAS by just waiting. You would have just waited two weeks. If you would have just waited 2 weeks, you would have been up 1,000 points. With a 0.01, that's $1,000. With a 0.1, that's $10,000. With a one lot, that's that's $100,000. If you was to wait 1,000 points, 1,000 points. If you would have just waited. I can't wait. You couldn't wait 10 seconds. I'm dead. So when it comes to, swing highs, swing lows, just overall pay attention to this, because this is what matters the most, is paying attention to your swing highs, swing lows. All right, so these are our lowest points, right? We're going to keep marking it up so you can keep getting an understanding of it. All right, so these are swing lows. The reason why we chose these is because it's the lowest point of the market. So the lowest point has to have a highest point. So these will be the highest point at the market at that time. I'm not talking about over here. I'm looking at what's happening right now, right here. So this will be the swing highs. Price may swing lows, and then it broke the swing highs. This is an indication. When price breaks swing highs, this is an indication, right? So then it makes its low, swing lows. So when it breaks back above the swing highs, we know it's going to go to the next swing highs. Ooh, I just thought of some new ways to say it. Church of Psychology. Yeah. Psi-etiology, I'm dead. All right, so back above this swing high is going to go to the next swing highs. Then there's new swing highs created, and it's going to repeat the same process. So for the people that don't know, where is it? Am I tripping? Here's our indication. An indication can only come from price breaking a resistance or a support level. I'm gonna say it again. Price can only make an indication when it breaks a support or resistance level. There's not an indication if it didn't break a support. There's not an indication if it didn't break a resistance. How do you know when it's going to reverse? I feel like, hold on, I got you. I'm explaining exactly how it's going to reverse, but I'm going to explain it again. Give me 1 sec. Right? So price can only make an indication if it breaks. Yeah, break and close. Break and close. It needs to make a high above certain levels, or it needs to make a low. So this is a resistance. Price can only make an indication above this level. Price can only make an indication above this level. There's a correction after, and you're always, if your trade is not coming from price breaking the previous level that it broke, if your entry is not coming from around this level, your entry's wrong. Your entry's fucking wrong. Your entry's wrong. Your entry's wrong. Wait, you're saying there's no real indication right here in this level? Yeah, this has been saved. I'm putting it on YouTube. No, where price currently at? Oh, yeah. Well, this is not a new indication. There's no new indication yet. There's no new indication yet because price. Let me go over this right quick, and I'll go over what's going on right now. Let me go over this right quick. So if your entry is not coming from price breaking back above this level, your entry is wrong, because you want to get in. You want to get in when price has already told you what it wants to do. So we have, this level, then it breaks out. It breaks out. You don't trade this. So you see this breakout, you don't trade this, because most likely price will end up correcting itself. And then this is where you trade. This is where your trade comes from. When price is breaking and closing back above here, this is where your trade comes from. This is where your trade comes from. If you're in the entry all the way up here, your entry's wrong. If you're in the entry all the way down here and price didn't even break, your entry's wrong. But if price is above here, gives you a good close and everything, this is where your entry comes from. And then again, it doesn't even have to close. If price is in volume and price is kind of making its way back above this level, it's most likely going to start pushing back up. Hold on, give me 1 sec. Oh, snap. Hold on. Let me do something right quick. I'm trying to make food too, because I haven't ate all day, bro. Starving. Hold on. Yeah, bro. If your entry doesn't come from that level, your entry's wrong. And I'm gonna tell y'all something, bro. If your entry doesn't side with the pizza rolls, I actually made a pizza, but I didn't make pizza rolls. Um, I make that mistake too. Like I feel like sometimes I try to get in up here and I'll be like, yeah, it's gonna go here anyways. So I might as well just enter wherever. But that's not the case because you don't want to find yourself, entering all the way right here. And then something like this happens, something where, price pulls back and then this is where your entry was supposed to be, but you missed it. And then you get in like all the way here, pulls back, probably stops you out or something. And then like it comes back up or it does like, other stuff. Brutal. Cooking top ramen. Wait, what happened? No one cares if you're hungry. Your job is to teach us. Well, fuck you. Yeah, you're out of here. Anyways, it's like nobody cares if you're hungry. I'm a human being too. Damn. I'm a human being too, bro. Damn. Anyways, if price is back above this level, this is where your entry is supposed to come from because you don't want to find yourself in a position where you enter all the way up here and you end up getting into drawdown from your position, kind of pulling back or retesting and then continuing up later. So definitely always try to get your entries roughly around here. Set alerts if you have to. Set anything that you have to help you catch these entries from the level that it breaks off of. He said, you're a bot. Okay. I'm a bot. Okay. All right. What was he at? Swing high, swing lows, indication, a correction, continuation. Yeah, just everything is good right now. So how do you go about, I think you mean how do you go about volume? All right, so it's two different ways. Volume matters super a lot because some people get into trades. You can get into a trade. This is one thing. You can get into a trade like London session because London session also amplifies with New York. So if NAS is moving during London, it's most likely going to follow along the next session possible. So when it comes to trading in session, that's what you want to do the most. If you're hopping into a US 30 position, NAS position, SPX position in London session or 3 a.m., don't expect it to move. It's not always going to move. Yeah, close the chat. Yeah, I'm going to close the chat in a sec. It's not always going to move when you think it's going to move. Give me one second. I'm going to close this chat. All right, we're going to talk later. It doesn't have to move when you think it's going to move. So it doesn't have to move at 9:30. It doesn't have to move at 10 p.m. I mean, 10 a.m. in the morning when New York open. It doesn't have to move around that time. But how it works is when you're trading US pairs or when you're trading indices, when you're trading in a session where price is most likely moving because the market is moving, what is it called? What is it called? Wall Street. Wall Street got the money going over there at 9:30. So that's when you want to be trading, but don't be like, oh, I can't, like if price action, let's say this trade happened, let's say this trade right here happened at 3 o'clock in the morning. Price action is price action. If price is going back above a level, then it's going back above a level. But don't expect it to do the same thing in the same session, if that makes sense. So we have this, right? And do the same thing. Don't expect price to start going crazy all the way up here when it's out of session. Because even though price action tells you that, hey, it's going to push up to here, it doesn't mean it's going to do that. But when it comes to volume, if it's like this, then most likely it's going to be a little bit stronger. So if you see something back above its level or below its level out of session, you can take that, but don't expect it to move. Don't expect it. It might move, it might not. Don't expect it to do anything. Just know that you're trading out of session, but you're listening to what price action is telling you. So those are some things you need to take in as well. Because it's been some trades that I've seen that it will be out of session and it will be moving, and then it will already hit take profit before your session even starts. So it's sometimes that it happens like that. So I'm not going to say limit yourself to one session. Be on the lookout. That's why it's easier. That's one of the main reasons I want to go back to only trading indices, because I was doing this. I was doing, oh, I'm only going to look at indices during New York. And then I'm going to look at GBP pairs during London. And then I was limiting myself because sometimes price would be making some good moves out of session where I can get in, and then New York session, it finished the move off. You know what I'm saying? So don't limit yourself. That's why I came back to one pair, because even though I'm not trading it 24/7, or I'm not trading it every session, I have my eyes closely by it. I have my eyes on it. Even like every step of the way, I got my eyes on it. That's what you're supposed to do. You're supposed to be tracking it down, bro. You're like, I'm gonna motivate you guys. You guys are fucking snipers, bro. You guys are snipers. You're supposed to be waiting for the prey, waiting for that time to strike, bro. Like, you're supposed to be waiting for it, bro. And when it's time to shoot, you gotta shoot, bro. When it's time to shoot, you gotta shoot. You cannot miss your shot at all. So that's what you're supposed to do. That's why, trading one pair in the beginning is super, super key, bro. You guys got to be sitting in the grass waiting, bro. And when it's time to strike, it's time to strike. All right, so we overall see that, this is the daily time frame. I was explaining how the daily time frame can help you in a swing trade aspect, because from here, let's say your entry was here, right? Here to here. You waited 166 days for this trade to hit your second target. You waited 119 days for this one to hit target one. But it's 2,000 points. But it's 4,000, almost 4,000 points. So depending on what you want to do, and I know the big points matter a lot, but you can also catch 200 points. You can catch 300 points. You can catch however many points on a smaller time frame. Let's say here, right? Because this was a good sell. There was a support level. There was an indication. There was an indication back below this level, right? Indication. It corrected itself back under this level, having a stop loss above here. And you would have been targeting somewhere around here. You would have probably did, I don't know how many points this is. You would have did 170 points. That's still good. With a 0.01, that's $170. With a 0.1, that's $1,700. Like, you just got to break it down by yourself. You just got to break it down of how it's supposed to be. And here we are now, right? Let's just go over where we're at now and what I think. I'm not going to hold y'all too long. I have to go in a bit. I'm not going to hold y'all too long, but I want to go over a lot today. All right, so this is two things I'm thinking, right? So let's delete this, right? All right, so we did have this over here, right? We had this. This was the target 2, right? Target 2. This is the level where price started this wholesale trend at. This is where that whole sell-off happened at. We ended up reaching this target. We also hit this one, but this one don't matter. We're at this one now. It hit this target. So now I'm looking at it, I'm like, okay, it didn't break above it or anything. So now I'm gonna zoom in, right? I'm gonna zoom in. Let's go back to the 1 hour, right? Price made a high here, sold off. Price came back up, touched that same target for the buys. For the buys back up, target for the highs, right? So when you're buying price, you always target the highs. And when you're selling price, you're always targeting the lows. He said it's about to crash. I'm dead, yeah. Then, since price is at this resistance, since we know at this level, price normally pushes down, even from over here, we know that price pushes down. Look over here as well. So price did sort of the same thing. It came up, sold. Oh my God, it actually did the same thing. It came up, sold off, tried to buy to the highs. It failed to do so. Same thing here. Right? So let's just go. I don't know why I did it this way, but price bought up, sold off. Tried to come up, break some highs, and failed to do so. So now, if I'm like, okay, price is at a resistance, it sold off. Now in my mind, I'm gonna be looking out for sales. This is like, I hate when y'all do this. Just because I say I'm looking for sales doesn't mean that's my bias. Doesn't mean that's my bias. I am okay with whatever happens. I'm marking my chart accordingly to what I see, not what I feel. I'm going based off what I see, not what I feel. So if I say I'm currently going to look for sales, that doesn't mean that's my bias. I'm looking for anything, you know, whatever makes money makes money. That's my mindset about everything. If I say I'm looking for this, I'm just going to look for it. That's not like, oh, it's just going to sell. It's not going to sell. You know what I'm saying? Like, that's not what, like, I'm going with whatever happens. Whatever happens, it happens, you know? So now with that being said, one thing I noticed, price at this level of support, it wasn't getting broken. That level of support got broken. This was a new low below this level. So this lets me know sellers can take control of the market from under this level. Price bought up, taking out all the people that was getting to sales on the first time. Remember, when price makes something new, it's going to liquidate you. So don't even think about trading that, bro. Don't think about trading the breakout. Stop trying to trade the breakout, bro. Stop trying to trade that shit, bro. Because it's like, you're going to be 50-50. You might win some, you might not. You might win some, you might not. It's like, you don't want to be in a 50-50 chance. You want to be in a fucking 90% plus chance of winning. So with that being said, took everybody out, everybody's sad, even the buyers, right? So then this is a resistance level, another breakout. Like the indication, when I say indication, that's the liquidity part. We might as well replace it with liquidity correction, continue. No, that sounds terrible. But yeah, the indication is only to get everybody out of their trades, bro. To get everybody out of their trades. People were getting into sales. People were getting into buys. Now look at both of them. They both wiped out. Now they don't have no money to trade. So now it leaves the bigger players. It leaves us, you know, our ICC people. It leaves us. We're like sitting back. We're like, yeah, we're good. You know, we're not trading that. So now we know back under this level right here, we can take sales back under this level because it's already shown us that under this level, it can push down to here. It went for more, and that's good for us. But since we know price is already bearish, we can hold a little bit. I'm not going to say, oh, we got out right here, because that won't be true. But I'm saying if you see price is still pushing, I would say roughly some of y'all would have closed probably like roughly around here. You don't know exactly where it's going to end. But the only reason you enter a trade like this is because back on this level, we know it's going to sell, right? All right. So with that all being said, price made a new low. Price made a new low. So what happens after price makes a new low? It starts taking them out. So people that are entering on a breakout, they don't know how, they probably got some profits from this. We was already in this trade from over here. So we can take out whenever. This was our main area to see get broken. There's a new indication here. Price is starting to take everybody out. Price is starting to take everybody out. Makes a high. Right? Makes a high. Now, this happened right when close happened. So it went back under this level that we know price is going to sell from. When it went back under this level, where we know price is going to sell from. So the reason why I'm saying I'm looking for sales now is because a couple of things. So one, we have price at this resistance level where it sold off the first time. Two, we have price at this level where it sold off on a daily at this level all the way back down to here. So that's number two. We have price making structure, bearish structure on a lower time frame, let's say the 1 hour time frame overall right here. So that's three. And then we have price under these levels of resistance, levels of support where it can possibly sell with a new low. So that's four reasons why I would think sales is coming. That's 4 reasons. So I'm going to go by that when time comes. So as we progress in a week, I'm not going to forget all of this. I'm not going to forget that price is at a resistance. I'm not going to forget, you know, at the daily, it's all the way over there that it's selling off. I'm not going to forget that there's a new low. There's a new low here that was that was made, and then price ended up correcting, and now we're building back down. I'm not going to forget that. So you recommend to hold? I'm in sales now. I mean, I'm not going to tell you what to do, but I'm personally looking for sales. I'm not going to tell you to get in or get out of your position. Just follow along with what price is telling you. Price right now is breaking levels of support. It's breaking lows again. It has a new low. It has a new low. So you take that information and do whatever you want with it. But I'm not going to tell you to get in or out of your position. I hold to TP, bro. It's either TP or stop loss. So I mean, on average, I'll probably hold my trades for like 2, 3 days. My longest trade was 2 months. My longest trade was the US 30 sell for 2 months. Hold up. Here it goes right here. It was my longest trade. I think I still have it on my Instagram. I ended up getting a position roughly around here. This was because price. This is why the reason I got into that position. If we go to a smaller time frame, because I already broke it down from there. I seen that price had this level of support. It had these lows, ended up breaking. I missed this entry. This is the entry I was supposed to have, but I missed it. So then I ended up getting this entry from price coming back under this level. And I was already looking for sales, keeping my stop loss above here. And then price ended up selling off for CPI, I believe. It was like CPI came out and then it did good. So that was 4 million. Yeah, it was that trade. Yeah. That wasn't me. It was 10 mil at the end. Yeah. It was all the way to the bottom and I was targeting down here. I was targeting this low. And I think this also came from the fact that if we looked at the daily, no, it wasn't a daily. I think it was the 4 hour or something. I was looking at a different time frame. I think I was looking at this time frame because we had this level of support. We had this level of support. Under this level, we seen that it sold off. So I think that's why I got into this trade early. I was looking for, yeah, I think I was looking for that setup. Honestly, hold on. Which one was it? How do I show? Is it here? Nah. How do I show my ideas again? Because look, this is that same trade, right? I was like, we have a new low in the market. I'm expecting a little buying pressure to show back up to hit the 32,400 level. So I wanted price to come back up to like roughly around like this level right here and then reverse. And then it did exactly what I said. It bought up a little bit, went back down. It went up to like 32. Yeah, I missed it by like 50 points, made a new low, corrected itself, and then ended up selling off overall. I wish I should start recording more of these, bro, so y'all can see how accurate I am. But yeah, that's pretty much it. Anybody got any questions? So I gave y'all what I'm thinking about. I gave y'all a little bit of price action. I gave y'all what indication corrections mean and continuations. I gave y'all the entry. Now is it selling? I'm not. All right, so I'm not going over US. I'm not going over Forex pairs. I'm doing only indices, bro. I feel like indices is the way to go. Break down US 30 on the daily. All right. I'm gonna do this and I gotta go. I gotta go for referral. All right. So US 30 is also in the same predicament. Honestly, US 30 hasn't moved like NAS has. It's kind of been at this resistance. So this is just an overall area of the previous high. And then we also have this being the previous high. And then price has not really made really new highs above these levels. So this is also something that can be very bearish or something that can mean very bearish movements is coming in because price hasn't made a new high like NAS has over the time span in a month or two. Actually, I think this is 4 months of not making a high. So price is at a level of resistance. So I see that price is at this level. Price normally sells. This was something I was looking at too a while back. If you scroll up all the way up on the Telegram, you might see it. But this was price giving an indication under this level that it can sell. This is what we was looking for sales. So this is why I think US 30 might end up selling pretty crazy because this is a new low. Price made a new high, ended up breaking that high, ended up also targeting the same high, and there's no more new highs. So no more new highs for US 30. So I'm gonna go in. I'm gonna break it down from the inside. So now price hits this level of resistance, makes a new low. Back under this level of support, makes a new low. Corrects itself. No highs above here. Still no highs, right? So this means price didn't make a higher high or anything. Then we start selling back down, and now we're making our way back under this level. So what I'm thinking is if price stays under this level, indices in general might end up start making its way down. I'm not saying that's what I'm not saying that's what I predict. I'm not saying that. I'm just saying what I'm seeing right now, what the charts is showing me is looking like price is trying to sell. Because I hate when y'all do that, bro. I would say, yeah, I'm looking for sales, and y'all be like, oh, Sai, why is it not selling? Like, bro, what do you mean? I'm just following along whatever I'm seeing, bro. I'm going along with whatever I see, not what I feel. I don't feel like it's gonna sell. I'm just saying what I'm seeing, it looks like it wants to sell. So we're gonna see how this day progresses. It's only Sunday. Don't try to trade US 30 sales or NAS sales today. Please don't do that shit. That is dumb. Please don't try to do that. Wait for Monday to come in. Sometimes I don't even trade Mondays. So I know you guys, bro. You guys are already trying to get into sales, bro. Like, calm down, bro. Calm down, bro. Y'all be trying to get into like, I'm gonna hop off this Zoom. 6 o'clock come, instant sales. Like, calm down, bro. Calm down.